flood insurance in the United States is a critical consideration for homeowners and renters in areas prone to flooding. Here's a basic overview of what you need to know. 1. Why flood insurance is important. 1. Standard homeowners policies do not cover flood damage. Typically, standard homeowners and renters insurance policies do not cover flood damage. 2. Risk of flooding. Many areas in the U.S. are at risk of flooding, not just coastal regions or near rivers. 2. National Flood Insurance Program, NFIP. 1. Managed by FEMA. The NFIP is managed by the Federal Emergency Management Agency, FEMA. 2. Availability. It's available to homeowners, renters, and business owners if their community participates in the NFIP. 3. Coverage limits. NFIP policies have specific coverage limits. 3. As of my last update, these were up to $250,000 for residential buildings and $100,000 for personal property. 3. Private flood insurance. 1. An alternative or supplement to NFIP, private flood insurance can be purchased separately and may offer higher coverage limits and additional benefits. 2. Growing market. The private flood insurance market is growing, offering more options for consumers. 4. Determining your flood risk. 1. Flood maps. FEMA provides flood maps that help determine your flood risk. 2. Risk factors. Factors like climate change and urban development can affect flood risk. 5. Cost of flood insurance. 1. Varies widely. Depends on factors like location, flood risk, the value of the home, and the chosen deductible. 2. Potential discounts. Some communities participating in the NFIP might offer discounts based on community floodplain management measures. 6. Purchasing flood insurance. 1. Through insurance agents. Flood insurance can be purchased through insurance agents who deal with NFIP or private insurers. 2. Waiting period. There's typically a 30-day waiting period from date of purchase before your policy goes into effect. 7. What's covered and what's not. 1. Building and contents. Separate coverage for the building and contents. 2. Exclusions. Certain items and types of damage may not be covered, e.g., damage caused by moisture, mildew, or mold that could have been avoided by the property owner. 8. Claims process. 1. Filing a claim. In the event of a flood, contact your insurer to start the claims process. 2. Documentation. It's important to document the damage with photographs and detailed records. 9. Preventative measures. 1. Mitigation efforts. Taking steps to mitigate flood damage can reduce premiums and protect your property. 10. Staying informed. 1. Changes in policies and coverage. Keep informed about changes in flood insurance policies, coverage limits, and rates. 11. Necessity. Standard homeowners and renters insurance policies do not cover flood damage. Flood insurance is essential in flood-prone areas. 12. National Flood Insurance Program, NFIP, managed by FEMA, it offers flood insurance to homeowners, renters, and businesses in participating communities. Coverage limits are up to $250,000 for buildings and $100,000 for contents. 13. Private flood insurance, available as an alternative or supplement to NFIP, offering potentially higher coverage limits. 14. Flood risk assessment, use FEMA's flood maps to assess your property's flood risk. 15. Cost factors, the cost depends on location, flood risk, property value, and deductible. Some areas might offer discounts. 16. Purchase process, buy through insurance agents. There's usually a 30-day waiting period from purchase to policy activation. 17. Coverage details, separate coverage for building and contents. Be aware of exclusions like damage from moisture or mold. 18. Claims process, in case of a flood, document the damage and contact your insurer promptly. 19. Mitigation measures, reducing flood risk can lower insurance premiums. Stay updated. Policies and coverage can change, so keep informed.